So now it's 7. Bank of America apparently is predicting 7 rate hikes this year.
Yeah, 7 rate hikes from Bank of America.
7 rate hikes? 7?
So you got 1, 2, 3, 4, 5, 6, and 7.
There are 7.
Can equity markets handle 7 rate hikes this year?
7, 7, 7, 7, 7, 7, 7, 7.
The simple answer is no.
My concern is that the market is running away with rate hikes that are in excess of what I think this economy can absorb.
Even if each rate hike is a full 1%, 100 basis points, 7 rate hikes would still not bring interest rates up to 0. The Fed is so behind the line is a dot to them.
Over the line? You're so far past the line that you can't even see the line. The line is a dot to you.
Not because the Fed is not behind, it is way behind. And because it is way behind, it has lost control of both the inflation narrative and the rates narrative.
This, my friends, is how behind the curve the Fed is, how late in the game, and they will not be able to catch up. The red line is the federal funds effective rate, meaning the rate that is either hiked or cut when people talk about rate hikes or rate cuts. The blue line is consumer price inflation measured by the CPI, and that itself is behind the curve, but let's assume that it's honest, which it isn't. When the red line is higher than the blue line, the Fed is out in front, moving ahead of price inflation to keep a lid on it. When the blue line is above the red line, that's when the Fed is behind the curve. When was the Fed behind the curve previously? In only 2 instances. One was here from 1958, September 1958. So for about 10 months. How far behind the curve were they? Not very far. There was a recession in this gray area over here. So it was inevitable, while on a gold standard, that the consumer price index would fall during a recession, and that is what happened. So the Fed did not have to be too far in front of the curve at that time. Now here is the great inflation of the late 1970s. Here, where the blue line and the red line are pretty much on the same slope, that is when the Fed was chasing inflation higher and eventually beat it over here. And on that strength, the dollar survived until today. The only other time when the blue line was higher than the red line and the Fed was behind the curve, it was not far behind the curve. That was from September 2002 until December 2005. And in that time, that is when the dollar index started to fall rapidly against all other currencies. And the dollar index collapsed eventually to record lows of, I think, around 73. So when the Fed was last behind the curve for about 3 years, they weren't far behind the curve, and the dollar index collapsed to record lows. Now, look how far behind the curve we are. The Fed is. Interest rates, the effective federal funds rate, is still at 0.08. And the CPI is right now at 7.12%. The Fed has never, ever been this far behind the curve, and it means that the dollar is going to die. And can you even see the federal funds line in blue? No. The line is a dot to them. 7 hikes? Fast rising wages could cause the Fed to raise interest rates even higher this year. Rapidly rising wages are expected to push Federal Reserve interest rate hikes at an even faster pace. They haven't even started anything. Average hourly earnings are running at a 5.7% pace for the last 12 months, near the highest levels in 15 years, but still 2 percentage points below CPI inflation, which is heavily manipulated down. Here's a great quote. The problem with the whole approach and what's got us calling for 7 hikes is the economy is not just hitting the Fed's goals, it's blowing through the stop signs, Harris said. What goals? High inflation and negative growth? That's your goal? If each rate hike is a quarter point, they would need to do about 30 rate hikes just this year to catch up to inflation so that real interest rates are 0. So my question is everybody insane? And the answer is absolutely yes. And when everyone turns insane, when you act sanely, you look crazy. And it's time to embrace that because things are about to get normal, because interest rates are about to normalize. And that is going to freak out everyone in the asylum. This is Rafi of the Endgame Investor. There's not much time. Perhaps you want to see what I am writing at the Endgame Investor to prepare. And if you're interested, you may want to hear what I'm saying about liberty, about God, liberty, the Bible, and Austrian economics. And you can hear that by becoming my patron on Patreon for as little as $3 a month. I'll see you after Thursday's CPI report.